Hey everyone, it's Moise here from Remax Impact. You can call me Mo if it's easier. I hope this video finds you doing well. Today we are chatting market forecast, what you can expect to happen in the mortgage and real estate market over the next 12 months, but from the perspective of a highly qualified mortgage broker. So today we have on board Omer Amir, top mortgage broker, but also the owner of Six Mortgage Group. And Omer, thank you so much for joining us.
Hey Mo, thank you so much for having me on. Thanks everybody for watching this. This is our first video of 2022, right? We're here. This is it.
Yes, and we had to do it virtually because we are in lockdown again, but technology is not gonna, if anything is gonna help us, it won't hold us back. And Omer, every time I announce to my database that I'm doing a session with you, a call with you, something related to you, the audience goes wild. I get bombarded with so many good questions. And today I had a lot of questions, but I narrowed them down to 4 topics that we can chat about. And if it's okay with you, man, let's dive right into it.
Absolutely. Let's go. Tell me, what do you want to talk about today, Mo?
All right. So first off, where are the interest rates now, and what do you forecast or vision will happen with the interest rates this year?
Okay, that's a loaded question. So there's a lot to unpack here, right? So we have to first understand exactly where our economy is, right? Interest rates have been very low since 2020. They've been significantly low, actually historic low. And a lot of it has to do with the fact that the Bank of Canada has implemented quantitative easing, right? So they've put in this cheap money into the market, hundreds of millions of dollars of cheap money into the market. That has resulted in super, super low interest rates. And everyone has taken advantage of these interest rates. And if you think about it, these low interest rates have become a catalyst in our home prices, right? So our home prices have seen a significant increase, more than anybody expected, right? 2020 CMHC, Canada Mortgage and Housing Corporation, this is the government body that looks after housing, right? That's their mandate, is to look after housing affordability and housing measures, right? They said in 2020 that we will probably have a 17 to 23% drop in home prices. That's what they said. They have economists on payroll that they pay hundreds and thousands of dollars to, right? And this is what their predictions were. Guess what happened, right? Just last year, what was your year-over-year increase just in Durham alone? What was it, like 40%, something crazy like that, isn't it?
Pretty much. It was actually around 31% when they averaged everything out, including Peel Region, Toronto Region, and Durham Region.
There you go. So far cry from a drop of 17% or more, right? So what I'm trying to say is that the cheap money and the cheap interest rates, they played a role. They obviously became a catalyst, but that's not the only driving factor, right? There are other economic factors associated with our real estate. Significantly impacting demand is supply, right? So there was this shortage of supply that hasn't changed, so that will remain. Now, going back to your interest rate outlook, right? So when cheap money was put into the market, what's happened is that our inflation rate has started to rise. In Canada, our inflation rate has usually staggered around 2%. Well, 2% is the target, so it generally hovers around 2%. It goes over a little bit. This is going back to 2019, 2020. Inflation has always been around, around this 2% mark. That's what the Feds want the inflation rate to be. Right now, Mo, take a guess where inflation rate is at this point in time.
Tell us, man.
4.7%. That is what inflation rate was pegged at in the middle of December, 4.7%. And now what's happened is Omicron has arrived, right? So I don't know what wave we're in, but Omicron is here and it's after us. It's gonna, we have to run. We have to hide from Omicron. We have to close everything down. What does that mean? Well, when you close everything down, and all of your, it affects human resources, it affects supply chains. And when these supply chains get affected, it will put further pressure on inflation. So inflation will probably end up going further up. So what happens when inflation goes up? Well, your money loses its power. Already, if you compare it to 2019 or 2020, our money has lost at least 7% in purchasing power. So what's happening is that goods and services are now even more expensive than they were before. So it's fantastic that you have all these low rates when you're buying properties and so on, but what about everything else? Because you still have to fill gas, you still have to buy, groceries, you still have to buy lumber, you have to, you know what I mean? Everything is affected when inflation goes up and everything becomes more expensive. So yes, you're saving on one hand, but on the other hand, you're paying more, right, for goods and services. So Bank of Canada really has no other option than to start hiking and increasing these interest rates. And now that employment is a little bit better, it's definitely better than it was in the last year and a half. Employment numbers are stronger in Canada, and overall, I mean, we're in the path of recovery. I'm sure Omicron will be a slight inconvenience overall. I'm sure this will go away soon, but what's going to happen is that the Feds will end up starting to increase these interest rates. So how much will they increase these interest rates? I mean, we don't know. We don't have a crystal ball, right? But the expectation that's being set by the economists could be anywhere up to 1.2% or 1.25% this year, right? Now, I know it sounds terrible. It sounds really bad that your interest rates are going to go up by a 1.5% or 1.25%. But generally what will happen is these will go up, they won't go up right away, right? There will be multiple slow rate hikes and interest rates will start climbing. So what does it mean to you as a client who already has purchased a house? Well, if you bought in the last year or so, you probably got a very good interest rates. And if you took a variable interest rate, your interest rate was probably between 1.1% to maybe 1.3%. Right? And even if you look at the highest end, let's say you took a mortgage at 1.3% interest rate, and let's say you have a $500,000 mortgage. Well, if interest rate increased by 1%, you'll go from 1.3 to, let's say, 2.5. What does that mean? Well, at 2.5%, your payments will probably go up anywhere from like $230 to $240 a month. So it's not going to have a significant impact, especially when you're already paying more for other things like grocery and food and gas and so on. And there's other things that you have to consider, right? And the fact is that most banks, when you take a variable rate mortgage from most banks, even if interest rates go up, your payment actually doesn't change. Your payment stays the same. Now, there are some lenders that offer adjustable rate mortgages where, yes, if prime rate goes up, your payment goes up with it. But most banks, like the big five, if you have a variable rate mortgage, if the interest rates change, your payment generally stays the same. You pay a little bit more to the interest, but your cash flow doesn't actually get affected that bad. Not unless, you're coming up for renewal, but then there are other options available for you. You can always increase your amortization at the time at the time your mortgage comes up for renewal, so you can decrease that mortgage payment. So what I'm trying to say is that yes, interest rates will start to go up. They could go up anywhere from 0.5% to 0.75% or all the way up to 1%. Will it have a drastic impact where people are going to start losing their homes or missing mortgage payments? No, it's not going to happen.
Okay, I like that. I like how you put a number to it to help consumers understand how much an interest rate hike does affect them monthly. Now, Omer, do you think that with this news, because along with yourself, many other articles are sharing that interest rate, it is expected to go up. Do you think this news is putting a sense of urgency in home buyers right now to jump into the home market as soon as possible to get today's interest rate to be exempt from the interest rate hike?
Well, Mo, January 1st or January 7th, we're January 7th right now, right? I'm going to date this video now because you're going to release this on January 14th and everybody's going to know it was recorded on the 7th. I'm just joking.
Love it.
But what I'm trying to say is that today's January 7th, but what does that mean? That's just a date on the calendar, right? Nothing has changed, right? From December 1st or December 8th, December 7th, we're in the same economic market. Right. So clients, whoever's trying to get a mortgage and these low rates are still available, people are still trying to get those. The challenge is inventory. The challenge is supply. Right. And that is something that we are just not able to mitigate. And that's why I don't think not much will change, if at all, in our market this year as well. I still think that we're still going to see the same kind of gains, and it's still going to be just as challenging as it was 10 days ago, as it was 30 days ago. So I don't think that's anything is significantly going to change. But yeah, I mean, when people know that interest rates are going up, they'd want to lock in, right? And everybody knows that we've been in the lowest interest rate environment ever in Canada, ever.
Yeah, makes sense. So Omer, let's dive into our next topic, let's say. You did shed on this a little bit when you answered the question regarding interest rate hikes are expecting. You did share your opinion on market outlook. Is there anything else you want to add on what you foresee happening in the real estate market in terms of market outlook?
Well, I mean, in terms of financing, or in terms of finances, I mean, I'm not a realtor. You are, and you're one of the best in the business. So you would be able to coach me on what you expect, prices doing, right? But at the end of the day, right, I think our challenge and we've had this conversation multiple times. If anybody has watched me talk on your videos, they know that I keep bringing the exact same horn, which is supply, right? The biggest challenge in Canada here, at least in the GTA, is the fact that we have no supply, right? And this supply challenge will not be solved in the next decade. We just don't have the capacity. We just don't have the infrastructure to solve that supply challenge. And it will fundamentally get worse, right? As we start welcoming the economic vital immigration that comes into our country, that has been on somewhat of a pause because of all this COVID nonsense. But when we start welcoming all the immigration, and as Canadians continue to buy more real estate, yeah, I mean, supply will become the defining factor for prices. So yes, interest rates may play a slight role. Like when interest rates go up by 1%, you might have some investors that may take a seat, right? They might say, okay, wait a minute, let's sit down, let's watch the market. So you may have some investors that start sitting down, pulling out, but doesn't matter. At the end of the day, there's still one house for 4 people or more, or 13 people, right? Like you've seen what happens when there's a bidding offer these days. There's a lineup of home buyers looking to get into that one particular property. So no, I don't think that we're definitely not going to see any sort of correction. Like if anybody thinks that, okay, I should just hold on and wait because interest rates are going to go up and home prices will magically start dwindling and they'll start falling, then, unless you have a time machine, I just don't see it happening. I'm sorry, right? I just don't see it happening. I don't see a correction. I don't see an adjustment. What I would agree with is we may not see a 30% year-over-year increase. I don't think we should see a 30% year-over-year increase, because it's almost getting to a point where there's investors out there that are saying, wait a minute, let's just buy pre-cons and quit our jobs, because we can buy pre-cons and we can continue selling those, and we're making more money than we are at our day jobs, right? So, that kind of activity, obviously is not something that that we want to promote, right? Like we are promoting housing for Canadians, right? People that want to buy something to live in, and everybody needs to have access to housing and affordable housing. So I do think that the feds have a lot of work to do. I don't know what they can do. I don't think they know what they can do. So, they've made a lot of promises. Nothing so far that's actually worked, right? They talked about putting in non-resident taxes and vacant home taxes, and little effect did that have, right? Prices are still skyrocketing. So unless they can fix the supply, I don't think anything is going to happen. So yeah, if you are watching this and you are thinking about getting into the market and you can't afford your dream house, get something, get anything, even if it's a condo or if it's a townhouse, or maybe you want to buy a house in let's say in Toronto, and now you are now you can afford something in maybe Pickering or Oshawa, right? Or you know, like Kingston or wherever, right? Just buy something, get into the market, because you will benefit from the appreciation of that asset. And at the end of the day, every single payment, every single mortgage payment that you make, remember, you know, more than half of that payment with these interest rates these days is going into principal. So consider that as a piggy bank. Half of your mortgage payment is going into a piggy bank, and you're saving that money. That's your principal. That's the only way you can build equity. You can take that equity and buy something. You can turn, you know, you can buy something bigger and better, but don't wait. If you keep waiting, you'll be left on the sidelines.
Not only sidelines, man, the way the homes are appreciating, we're forecasting a 15% appreciation. I'm going to do a whole different video on why 15%, but 15% is a big number. So not only will you not be further away from home ownership for your ideal home, or even to get in the market. Ideal home is like a little bit further out now. I can't get my ideal home. Many people around me, in fact, everyone can't, because of how the prices are. We got to baby step it, which is normal, which is okay. Everyone's doing it. But soon we may not even be able to get in the market. So not only will we miss that opportunity potentially, but rents are going up very, very quickly. So it's either you make that towards a mortgage, maybe it's a smaller unit, but it's going to principal, or the full amount of rent going nowhere. And that also makes it tougher in terms of getting into home ownership, because now you're able to save less. Right. And that's a massive, massive point, especially for the youngsters, because who doesn't want the mansion, Omer? Everybody wants the mansion, but we have to make it normal that you have to get there with baby steps.
I absolutely agree with you. I absolutely agree with you. And you know what? And people that have been waiting because they, you know, they feel that either we can save more for down payment, or we can, you know, or income is going to go up in the next, you know, year or 2 years, right? That's the challenge that they're facing, right? So maybe consider something like a pre-construction, right? At least park your money, right? And take advantage of the market appreciation, because markets go up in tandem, right? Just like that detached is going to go up, so is that condo. So I absolutely agree with you. I mean, it is imperative that you don't sit in the sidelines and wait, especially if you're paying rent. I mean, nobody wants to pay rent, right? And there are programs out there that you can explore, right? Where we can actually assist you with potentially your down payments, or if you have bruised credit, you know, we can assist you with that. If you're self-employed and the bank is saying no, there are other options out there, right? Talk to a professional. Talk to Mo. He's helped so many people, you know, get into home ownership that honestly thought that it's not possible for them. I've seen it. I've been there. So it's pretty crazy. And look at how active the market has been, Mo, right? Like I'm talking about during the holidays when everything's were closed down, we were still working on transactions, right? You know, we're working on a mutual client, you and I, where all the appraisers were shut down. And we finally found an appraisal company that said, okay, fine, we'll go in during the holidays. And do you remember what they quoted for their appraisal fee?
Yeah,
It was
$1,500 plus HST.
$1,500 for HS plus HST. I mean, that is crazy. But you know what? We've never seen this before because there was no sense of urgency, right? Like generally in a normal market, you know, after November, well, going into December, things closed down, things died down. But here we are where nothing has died down. You know, there's still buyers that are looking for houses. They're still having the same challenges with the lack of inventory and yeah, I mean, they're still out. So I think this is going to be another really, really busy year. And you know, don't worry about interest rates. I mean, if you're watching this and you're thinking that, you know, interest rates are going to skyrocket in the next 10 days or next 3 months, and I should wait or I should hold off, none of that matters, right? And nobody has a crystal ball, right? Like right now we have Omicron. After Omicron leaves, I don't know if Optimus Prime comes and something else happens, right? We don't know. We really don't know. So, you know, economic bad news means interest rates stay down. So if things continue to stay, you know, in this lockdown mode and stuff like that, then yeah, I mean, interest rates could continue to stay lower. But But that should not be your deciding factor of home ownership, pretty much.
Well, Mary, I want to highlight three important factors that you mentioned in your few sentences right now. For one, there are many builders that will be launching their projects in the Durham region, and to promote their project, they have a flexible deposit structure. Builders usually ask for 20% of purchase price in the first year, which is a lot of money. 20% is a lot of money, but a lot of the builders are doing 5% a year, which comes up to like $25,000, $30,000 a year for the next 4 years. And then you get into home ownership. So not only do you have the ability to either do that yourself, maybe with the help of a friend or even family. A lot of first-time home buyers are getting help from family, and that's fine. That's normal, right? But during the next 4 years, while you're making your deposit payments at $25,000, $30,000 a year, your unit's also appreciating by, for one, 15% this year, the forecast, then maybe 10% the next year, and 5% after that. And before you even close into your condo, your project, your unit has appreciated by $150,000, $250,000 at a minimum, right? And that needs to be the vision. The individual who we were working with who couldn't get an appraisal, their cost of getting a property during the holidays was to pay 3 times the value of getting the appraisal. They paid $1,000 more. They paid $1,000 more, but their home appreciated in the month of December by $25,000. That was their cost of getting into home ownership. And obviously $1,000, 25 grand, it doesn't really add up, right?
Well, it's all about the big picture, right? So yes, yeah, that appraisal cost them $1,000 or $1,400, but like you said, they already made $25,000 in that 1 month of December. So
that needs to be how we look at it. It's never ideal. It's the way of how you look at it. And a lot of people are making that shift mentally to get into home ownership. And the people who aren't are sadly not into home ownership just yet. But we want to promote that for everyone, right? We want everyone's best interest. And I want to leave a thought, and then I want to jump into one last topic, Umair. But I want to leave a thought with the audience, right? If you're waiting for the interest rates to go up, so then you can purchase a home at a corrected price. Crash is a little bit further away, corrected price, right? Interest rate going up also affects you. If it affects other people's affordability, it affects your affordability as well. So is it not possible that if the interest rate goes up, you also may not be able to afford the exact same home that 15, 20 other buyers are now not able to afford, ultimately releasing to that correction? So if you're waiting for that, to each their own, right? Your gut decision, but do factor that as well, because it does happen. We've seen so many real estate markets, Umar, you've seen more than I have. People wait and they're still not able to purchase because now the affordability is not there because the cost is too high, right? So Umar, next topic, and this is going to be a final one. What tips do you have for home buyers?
Same as always, make sure you're working with a professional, number one. Right. And when I say professional, I mean, someone like yourself, Mo, Mo, you're a professional from RE/MAX, that's what you want, right? You want a professional real estate agent who knows the market. So when you're going out there, you're putting offers on properties where MLS prices are irrelevant, right? You know that you're doing your job because someone like Mo is able to look at that property. They're able to do their research. They're able to pull up the numbers. They can do the math. Right, which is very important, right? You need to be able to do the math. You need to be able to see what that property is actually worth, so you're not overpaying for it. Because if you overpay for a property, there can be other issues, right? Your appraisal might not come in. The bank might say no. So you have to make sure that you work with someone who knows what they're doing. I know everybody's family and uncle is now, someone who does mortgages and real estate, and maybe your uncle is great. That's fine, but make sure that they're professional. They do this for a living. They do this on a daily basis. They have access to all the data, right? This is someone that can do research for you. This is someone that can look out for your best interest as opposed to just selling you a house, right? So that's the first and foremost point. The second point is obviously make sure you know what you're getting approved for. Make sure you have a pre-approval. And if your pre-approval was done, 3-6 months ago, don't just think that it's valid anymore, because your financial circumstances change, right? Because what you may not have thought about is that, over the holidays, you took out a new credit card from Walmart and Best Buy when you're buying that beautiful big screen TV. And I'm sure the big screen TV is great and you're watching Cobra Kai on it right now. And that's great, but that could potentially hamper your mortgage approval. So make sure that if you had a consultation with your mortgage specialist or your bank, you're constantly in touch with them, and show them what you're buying, show them what kind of property you're putting an offer on. And that's paramount. And the last one, which I think is very, very important in this market as it pertains to interest rates. If you are getting a mortgage out there today and you have a beautiful interest rate like 1.2 or 1.3 or 1.4, right? Consider increasing your mortgage payments. So if your mortgage payment is, let's say, $1,500 a month, or let's say it's $1,800 a month, well, if you can afford it, instead of $1,500 a month, maybe pay $1,800 a month, right? Increase your mortgage payments by $200 or $300. It's called a stress test, where you're not only stress testing yourself in case when the mortgage comes up for renewal and interest rates have increased, you're protecting yourself from a payment shock. But more importantly than that, that extra payment is going towards principal. So it's paying off your mortgage faster. It's decreasing the amount of interest you pay on a monthly basis. So if you can afford it, take advantage of these low rates, right? Because you're never going to see, potentially, you're never going to see, I mean, I don't have a crystal ball. I never predicted COVID, nobody did, but you probably won't see this kind of market again in this country, where you're going to see rates as low as 1.1% or 1.2%, 1.3%. People who are buying with 5% down, you can actually get a mortgage right now with an interest rate of 0.99 or 0.95%. It's insane. So take advantage of that, right? Set your payment up at maybe $200 more or $300 more. And if you do that, an interest rate hike will not impact you one bit. That's my last point.
Got it. I love it. So I'm gonna a thought just came to me, and then we'll wrap it up. You've been doing mortgages for many years, right? Probably much longer than I've even been an adult. So you've seen quite a bit of the market. For as long as you've been providing mortgage solutions, CMHC has probably been saying the market's going to crash. What I want to know is how many times has CMHC been correct with their forecast during your tenure providing mortgage solutions?
You want an honest answer? I've actually never seen a CMHC report or headline that's come true, come to fruition. I've never actually seen that.
Not even a little bit.
I mean, depending on what they've predicted, but about prices and so on. Yeah, I don't remember one report where I was like, wow, CMHC told us. They sure told us so. Right? I've never seen that. And, some of the decisions that CMHC has made over the years, they've been very, very surprising. I don't get it, right? Like I've talked to you about this before as well, where it just doesn't make any sense to me that, if you're putting 5% down or less than 20% down, the maximum amortization that you can get is 25 years. While if I'm putting 20% down, I can get 30 years, 35 years. Some lenders even 40 years, right? But I can't get more than 25 years for a first-time home buyer who's based on their life stage, they're probably in their mid 20s to mid 30s. So these are these are the perfect candidates of individuals who have more time to actually pay that mortgage off. Right. So yeah. Why are we stressing them with higher payments at 25-year amortization? I don't get it. I don't get it. At the end of the day, I think affordability is a big challenge in this country. And I hope the feds come around and increase the amortization to, maybe 30 or 35 years for first-time home buyers, because it's direly needed. You can't buy anything for $500,000 anymore. I mean, it's very difficult. Right. And, a starter home used to be for $500,000, back in the day. Now it's not, now a starter home is what, like 7, 8?
800,000. Yeah. Unless you want to get your hands dirty, it's 700,000. Well, it's lower than 800,000. But what people don't realize is it's really hard to get fixer uppers with less than 20% down payment, because the insured companies will not insure a house that needs work. They need a house that's readily habitable. A bit of work is okay, but I'm talking like a full fixer upper where you cannot stay there. You cannot breathe the air, the atmosphere, because you have to do that much work, right? That's available for less than 800,000, but something habitable is starting at 800,000. Yeah.
Absolutely. So this is something that, the feds have to sit down and look at. Right. And they have to understand that they are increasing the disparity between between people with wealth, basically, right? And because if you have if you already have a home, and your price, your value of your home has risen 30% or 40% in the past couple of years, you can easily refinance that property and take that equity out. Because if you have 20%, you can continue buying multiple houses. There's so many lenders out there that will help you, right? And you can create an empire. But someone who's just getting into the market, with 5% or 10% down, they're having a hard time qualifying. So so I think this is where we need to do some work, where we need some government intervention. They need to do something for first-time home buyers.
And this is why I bring it up, Omer. A lot of home buyers are watching CMHC. Yesterday, a report came out that from CMHC, the prices will go down by 45%. Which home buyer doesn't want that to happen? You and I are homeowners. We actively invest in real estate. If they were correct, we would time it, and we would also purchase our investments at a 45% decrease in value. People don't understand that's nearly half. Like, that's not really realistic. And because of that, they then wait, and it doesn't happen. So all we ask is that in addition to your other sources of research, you factor in what we said, because everything we said today is about 3 days worth of research, numbers, data, and predictions that are coming from experience, right? Everything that I share, I speak to veteran real estate agents who mentor me. They have been here for 50, 60 years, and I get their opinion too. So we're very careful of what we're sharing with you, but we're also using it as well. So folks, thank you so much for coming and watching this. It was a longer video, but we hope you find a value. In the description of this video, we will have Omer's email contact. And if you want to get a pre-approval, which is required, in my opinion, these days, even for purchasing a new build, you can email him, you can schedule a call, and we can take it from there. Omer, thanks, dude. Thanks for hopping on.
Thank you so much, man. Thanks for having me on. I thought we were doing a TikTok. I was ready to dance and everything. So I guess that's what happened.
We don't do dancing TikToks here. We're very professional.
We're very professional. That's true. That's true. It was a pleasure, Mo. Thank you so much. Thanks everybody who watched this. And yes, if you have any questions, please reach out to myself or Mo. We'd be more than happy to assist you.
Have an awesome day, guys. Bye for now.
Take care. Bye-bye.